Alright everyone, and welcome to this video. So I'll be showing us how to use the relative strength index, otherwise referred to as RSI. Now before I go on, it will be good of me to define what RSI is. RSI is actually quite simple. It's a momentum indicator, something like your moving average. So what it does is that it tells you where the market is going and what has been happening by it shows the results in the form of momentum. So it basically tells us what momentum the market has. It lets us know periods that are high and the periods that are low. Okay, so it's something like your moving average, except that it has a little bit of technicality to it. It's not as straightforward as your moving average is. So first of all, RSI is a momentum indicator. Now, second thing with RSI is that, contrary to what a lot of people have said, RSI is not a measure of oversold and overbought condition. Okay, I was discussing with someone this past week, and I mentioned something about RSI, and the response I got was that, oh yeah, I know that one. It's supposed to tell us overbought and oversold condition. RSI does not only tell you oversold and overbought condition. If that is your idea about RSI, you might get it wrong. Now, in the last video, I spoke about moving average crossover. I said what you've probably heard before is that when there is any crossover, you should either buy or sell. But what the person that told you did not tell you is that you don't use moving average crossover for a trendy market, for a ranging market rather. That it is best for a trendy market. So if you use it and you are lucky, it's just because you are fortunate. It's not because you did something right, or it's not because you did it well or like that. So moving average crossover is supposed to be for a trendy market and not for a ranging market. For a ranging market, you will discover different crosses like that. So just like that, your moving average, your relative strength index is not best for some certain market, okay? And it is not a measure of overbought and oversold condition. Now, before I get into it, I'll just show us some things to confirm so that you would know that it is not a measure of overbought and oversold condition. So to get it right, okay, we'll come here like we always do, and then we choose on relative strength index. So we have our relative strength index added. Now I should say this: relative strength index is measured over 100, so it's like a percentage. It lets you know whether market is going up or it's going down. It is always expressed over 100. Now, what a lot of people have said over time is that when the market is at a high point, say about 70, the market is entering an overbought condition. And when there is an overbought, that means the buying pressure is too much and they would have to start selling. So they will tell you to sell at that point. And then the oversold condition is the opposite. They will tell you to buy when the market has fallen to a place like, let's say, 30. Now, on its own, this ideology looks like it makes sense, but if you check this page, you would see. So this is our RSI here. You will discover that at some point, market would be higher than 70, and at some point, market would be lower than 30. Like this place, market is 17. So if they had told you to buy at 30, you will discover that market is still going down, and you would be caught out. Now, what they should have told you is that when the market gets to a place like 30, you should look for opportunity to buy, not that you should buy. Okay, RSI on its own does not tell you whether you should buy or not. It does not tell you whether market is overbought and oversold alone. You should look for opportunity to do it. So it is possible. The thing with the forex market is that market can either choose to go in any direction at any time. It does not really care so much about one indicator that you are using, but instead you can look for signs and signals that whether price is going to reverse or it will continue. Probably you look for a reversal candle, or you check with your other indicators to confirm. So basically, you should not just look for an opportunity to whether buy or sell because it has passed a certain point that someone told you it will pass. Now, I know this looks a bit too much to take in, especially considering that I've not really introduced RSI, but I felt it is needed to just debunk something like that before we move into the video and understand what RSI really meant. Now, there is a formula for calculating RSI. Don't worry, I'm not really a mathematics person, and I'll just lay it down here so that we can get it. When we get to the group, I would explain further. So let's say we have something like this. We have a text, and then so the formula for calculating RSI is something like this. All right, so let me remove this, and so something like this. So your RSI equals to 100 minus 100 over 1 plus RS, where your RS is average gain over a period divided by average loss over a period. Now, an understanding of what your RS means will help you understand what relative strength index actually really means. Relative strength index is used to measure average gain and average loss over a specified period of time. Okay, so if you are using a 10 period RSI, for example, you are looking at the average gain over the last 10 period or average loss over the last 10 period. You know, I said it's something like your moving average. Remember, your moving average is considering a period, okay, or set of period. So your 10 period moving average, for example, is considering how price has reacted in the last 10 period. If it's if you are using a daily time frame, how price has reacted in the last 10 days. So if you are using a 10 RSI too, we are considering on a daily time frame, we are considering how price has reacted in the last 10 days. Okay, if you are using a 200 RSI, you are looking at how price has reacted in the last 200 days. So is it a profit or has it been a loss? When you understand this, you will better get how to use RSI. Now, when the average gain is more, your RSI will be higher. Remember, I said RSI is over 100. So when your average gain over the specified period is higher, your RSI would be closer to 100. When your average loss is higher, your RSI would be less or closer to 0, or it will tend towards 0. Now, let me repeat that so that you get it. When your average gain is tending towards 0, that means when your average gain is tending towards 100, that means your RSI will be higher. When your average loss is tending towards 0, that means your average loss is higher. Now, when the average gain is higher, we can say the buyers are in control because gain is always going up. If you did normal profit and loss, or if you've been trading the demo for a long time, gain means buying. So you can say that the buyers has been in control for a specified period of time. If it is a loss or the RSI is closer to 0, we can say the market has been bearish for an X number of period. All right. I hope that is not too much to take in. Let me demonstrate. Say, for example, your average gain over, let's say 10 period, or has been 10 over a specified period. Say your average gain has been 10, and then your average loss has been 20. Okay. Now, naturally, like this, you can see that our average loss is more than the gain. That means the market should tend towards the bearish side. But to confirm that, let's plot this in. Say, what is our RSI? First of all, is to find our average gain. To find our RS. Remember, you don't need to do something like this because the computer displays it automatically. But let's just do this. Now, let's say this is 10 divided by 20. Okay, then our answer would be 0.2. Okay, so we have our RS as 0.2, 0.5 rather. So we have our RS as 0.5. Then 100 plus 1 plus RS, that would be 1 plus 0.5. So that would give us 1.5. All right. So 100 divided by 1.5. Remember, you don't need to do all of this because your computer does it for you. So we have 66.66 or 66.67, like that. So to find our RSI now would be RSI equals to 100 minus 66.67. Okay, so our final answer would be 33.33 or 343, whatever you want to use. So 33.33. Now, this is our RSI, 33.33. This is closer to 0. So we can say our average loss over the last specified period has been more than the average gain. That means the the sellers have been in control. Okay, now let's go into more practical aspect and see what it looks like. So this is our column for, this is our table for RSI. Okay, it is like a line chart to just show us what the market has been doing. Now the half of 100 is 50. Remember I said your RSI is rated over 100. So the half of 100 is 50. So we can say 50 is like the benchmark. When the price is higher than 50, we can say market has been going up. When the price is lower than 50, we can say market is coming down. Follow me, you would understand what I mean by that. Remember I said when price is generally lower, you should not look for an opportunity, or you should not automatically do what you want to do. You should look for opportunity to whether buy or sell. So let me plot this on the 50 range. It's possible I don't get that 50 exactly, but just so you get the idea. So this is 50 point something like this. Okay, so sorry. So this is the 50 point. So when price is higher than this 50, I can say that market is in an uptrend and I should look for an opportunity to buy. Okay, say when price cross this up, I should look for an opportunity to buy. I should look for an opportunity to buy. I should look for an opportunity to buy at this point. I should be looking for opportunities to buy when price is more than this 50 line. Now remember, you don't use it on its own. I will get to that part later, but let's take things slow. So when price is less than 52, I should be looking for an opportunity to sell. It's actually quite simple like that. When price is higher than 50, I should be looking for opportunity. Remember, I didn't say I should sell. I should look for opportunities to sell. And when price is higher, I should look for opportunities to buy. So this is the general 50 points in our table. This is how it looks like. Look for opportunities to buy when it's higher than 50. Look for opportunity to sell when it's lower than 50. Now, for those that said RSI is a measure of oversold and overbought condition, they are not entirely wrong. Okay, but it's the way they said it is wrong. Okay, so for example, you might be wondering, okay, what if I buy? Where do I go out of the market, or where do I take my profit? Generally, uh, there are some points in the market that price respects. Okay, if you enter, since it respects that 50 range, there are also points that you should look to get out of the market if you are taking your profit, for example. Now, remember, put it at the back of your mind. No indicator is 100% foolproof. No indicator would be consistent forever. So you don't take this dogmatically and just assume that price would always get to that point, or price would not get to that point at every time. So those points are the 70 range and the 30 range. So if price is crossing the 50, for example, and you are looking to buy, when it gets to about 60, 70, you want to get out of the market. Say when it gets to 70, you want to get out of the market. Now, and the opposite, when you sell, when price is just crossing below the 50, when it gets to around that 30, you want to get out of the market for selling, and you are looking for opportunity to buy because price is likely going to go back up. But like I said, you are looking for opportunity to, not that you are doing it automatically. So let's identify those points too. So this is the 70. Remember I said 60 to 70 range. So this is the 70, but let's come down to 60. So this is the 60, and then this is the 30 range thereabouts. 30 range is around here. So this is the 30 and this is the 60, but I would extend, you can extend this to either 60 or 70 if you want. You can make it as high as 70. Depends on the time frame you are trading. For example, if we should come down to this is 4 hour now. If you come to 4 hour, you would see this is the 70 range around here. Okay, but it's dependent on you. You can backtest as many times as you like to find something that you are comfortable with. Now, you can change the period of your RSI here. I forgot to mention that. Say we are considering, all right, let's consider a 10 period RSI. So we are considering the RSI, the average gain or loss over the last 10 days. So this is my 60 point and this is my 30 point. If you want, you can make this so to reach your 70. Can make this reach your 70. Now it works with different time frame. If you come to your 1 hour, you get almost the same thing here too. So if we go back in time, how about we make this okay? All right, that's fine. This for demonstration purpose. If we go back in time, this is our 70 and this is our 30. Let us notice what price does when it gets there. Let me bring back this 50 so that we don't confuse ourselves. So 50 is around this side. I'll make this red. So this is like the midway or the midpoint of everything. Let's start from something like around here. Okay, so price started at this point and it came down. It got to this point, 50 range, and then it broke down. Okay, so if you had wanted to sell at this point, you could have sold here and you could have made it through this place. But price went up, all right, and then it kept going up. You would be, should I say, wrong if you just focus on this point only because it can be confusing. That is why we have lines here. If you check there, you would see the RSI at this point was 51 and going up was 57, 56. This was 62. This was around 62 still. Now it has crossed the line and we are seeing 52. We are still seeing 52. We are seeing 23. All of a sudden, it has gone to 23. But it is showing us that the market is still going down. Average gain over average loss. So at this point, if you had sold here, you would have taken your profit around here. Okay, this is still below our 30, or this is our 30. And then remember, I said you don't just do the opposite. You don't just buy here thinking that market will go up because it has crossed that 30 threshold. You should look for opportunity too, but the opportunity did not present itself yet. And then when it crossed eventually, it was showing us that price was going up. So you could join the market here. You can either decide to ride it all or just take your profit since you don't know whether it's coming back or not. So if we check over time, it will cross and then it will come down for a while, and then here this 30 acted, it crossed and went up. It wanted to come down, still went up to 67 on that side. Then it came down again to test this 30 threshold, and then it went up, came down, it went up, and it has been repeating itself like that. So the 70 did not quite hold here, but you should look for safe zone to take your profit and get out of the market. It's not your business what the market wants to do. You can just, if you want to, you can move your stop loss to this point. Okay, but here someone would probably, the explanation was that okay, market is already entering oversold, overbought condition. You should just look to sell here. If you are sold at this point, you would find yourself on the wrong side because market still went up very well. It still went up quite well, and then it finally came down. Okay, if you had entered here to sell, it turned back. So you should always be ready to guard your profit, even when you are trading. And then when it got to this 50, and it looked like it was going down, it still went up again, and it respected this line. You could take your profit here, you could take your profit here, and then it came down, still broke through. So the general idea is this: remember, you can customize it the way you want after back testing a lot. So you can use your zone can be, your take profit zone can be about 60 to 40, whichever one is comfortable with you. Once you identify the points that price has been respecting over time, remember, it is this your RSI has a lot to do about it too. If you are considering a 200 RSI, for example, you would see the result that it actually, because you are considering data over a very long period of time. So you would see something like this over here. So let's go back to the chart and see what it looks like with the chart on. So this is how it looks like on the normal chart. If you observe, you would see, like I said, your RSI is not something that for example, if it is at this point you are thinking the market has been, this is indicating overbought condition, you would realize that there is really nothing overbought about this. It's just a response of what had happened in the last few periods. So if you check this point, this was the lowest point. Sorry, my bad. All right, so this was just the lowest point around here. It was just the lowest point here, and then it was signifying that the average loss has actually been more than the average gain in the last. Remember, we are checking the last 10 days, so it was reflecting. Originally, it was here, and then it started reflecting. So when price started going back up, okay, then it started going up, going up. If you wanted to, you could have bought here and then you take it up until it got to your 70 zone, and you could have taken your profit. Coincidentally, your 70 zone was on the same side as our 200 moving average. So the RSI is not just something to follow blindly, whether it is at this point market is oversold, I should want to buy, or it's at this point market is overbought, I should want to sell. No, it's something that gives us a clearer picture of just what price has been doing over a specified period, just like your moving average, and you should not just follow it blindly. So you can customize your parameters the way you want. You can make it any period, but don't always change your period to fit in. Like I said with the moving average crossover, because you want a crossover, don't just change the parameters of your moving average. Don't change the parameters of these two. What you are using should be what you are using. Don't confuse things together because you want them to fit. Once you are not seeing a clear signal, don't do it. It's as simple as that. So here, when price wanted to, it was pushed back down, and you saw a perfect opportunity to just keep on selling, keep on selling, keep on selling, and it will move back to the currently. Okay, at this point you might not know, okay, should I buy here, what is the market telling me to do here? But if you are looking at your RSI has already broken through the 50, so you might not want to buy it normally if you are not using RSI, but this is something telling you that okay, there's a bit of gain that you might push through here, and then when it got here, market actually started coming back down. So but a word of warning, although RSI is not really recommended for forex trading, it's best for trading stock market, because stock market is always most of the time it's going up, unlike the forex market that is always fluctuating. When the stock market is going down, it's because probably something happened that it will just last for a while. It won't last forever. So that's the thing with stock market. But for forex market, it's always fluctuating like this. But if you want to use it for the forex market, use it in combination with other other key indicators. For example, if you want to use the it with moving average crossover. Now, at this point, there was a bit of crossover here. Okay, there was a bit of crossover. Okay, let me look for a better one. Okay, there was a bit of crossover at this point, but these ones are shallow crossovers for a market that is a bit of a ranging market. Let's move down to 4 hours and see what is going to bring for us on the 4 hour time frame. So there was a crossover at this point, and say you want to know whether you should buy or sell, for example. Now, after this crossover occurred, remember the 50 just crossed our 200 moving average, and you should be wondering, okay, I should want to sell at this point. Now, if this is over 50, selling at that point might not be wise unless you see another indicator to tell you otherwise. But if it is below 50, because 50 is serving as say a form of support and resistance, that means it is telling you that all right, I can probably just buy because our average loss is quite much too, or maybe it's just heading down. So if you check at this point, it was hitting our 50 here, Okay, our RSI at this point was low, and then it started coming down at this place. So if we go down and see, there was a significant one here. Okay, our RSI was quite low until the final push that broke through everything. So this market is not so clear. What I'm just trying to say is that you should not use the RSI alone. I think it's just better I put it like that. Don't just use your RSI, just like you can't use one indicator alone without a confirmation. It might be telling you the wrong thing, or it might be passing the wrong signal to you. Don't just use your RSI alone on its own. Be sure you know what you are doing before you use your RSI. So that will be all for this video. In the class, we will discuss more. There are actually lots of things I didn't say and lots of things I tried packing into one. So we will discuss more in the class on the group. So thank you very much for this, and I would appreciate if you try it out as many times as possible. But remember, I said not every indicator is meant for you. You don't need to try out every indicator out there before you know what you are comfortable with. If you do, you would tire yourself out before you are even done with it. So don't try to try every indicator out there. Not everything is best for you. Thank you very much for joining this video.